Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, good morning. Welcome back to another week in the crazy markets. Of course, a pretty wild one, a pretty wild open last night in terms of everything that went down over the weekend, craziness. The story continues to be a wild one with oil disruption kind of being at the center of it. We do see high levels of volatility across markets. As we start out of the week, I went and sent this to members. This was just kind of my opening thoughts here as we got started. At this point, oil has cooled off a little bit. We are looking at oil now up just 10, 11%, as opposed to it went up, believe it or not, in the Asian session at one point up 30% on the day. An absolute crazy move, to say the least. 30% up to how far did it actually go in terms of price? $120 a barrel, just about. We didn't quite get there, but very close. That is an absolute insane move that we saw last night. Another wild market open, oil up 20%. As far as 30%, the dollar continues to dominate in FX land. Gold selling off due to broad selling, due to margin calls. We talked about that a little bit more. There is a reason why gold is down. It is not just manipulation and the market is rigged. That's what I keep seeing people say online. This is ridiculous, and they're upset that gold is down on a day like this. But it actually historically kind of is the way it goes. When you have broad selling, margin calls taking place, people sell off wherever they have cash invested, and that includes in gold. Especially with the dollar firming up, you are seeing gold getting a little bit of a sell type move. You also see yields moving higher. That is also putting pressure on precious metals. So for the gold traders out there, gold, at least right now, is seeing some very indiscriminate selling alongside other international stocks and other risk assets. Surprisingly, Bitcoin holding up really well given all of the stuff that's going on. Stocks and risk assets are bright red internationally. Of course, I wrote this last night. Things are actually kind of bouncing, at least from where they were. We were down as far as 2.5% on some of the major indices. My game plan, I'm looking to fade any pops on indices on the short side with small size, as always. I also noted that I don't love shorting indices, but believe that the easier path is lower currently in the current context. I'm also looking to sell premium in the options market, cash secured puts on ETFs like SPY. I'm looking to buy any USD weakness. So that's another thing that I'm watching here on the open. And I am actually kind of neutral on the price of oil in terms of trying to trade this, right? I don't have any interest in trying to go long oil at these levels. I also can't really tell you where the top is on it, so I'm not looking to short it either. Although that is a nasty sell-off that we are seeing for people who did try and chase that oil price. That is a painful move there that we are seeing here this morning. I'm also cash heavy, which feels really good right now in regards to my positioning. I feel nimble in terms of my portfolio as opposed to stuck. If you are very long, I don't know, tech stocks, like high risk, high beta stocks, this is a tough circumstance. Whereas if you have some cash on the sidelines, what's nice about this is if you have some dry powder and you're looking at this and you're saying, all right, we're 5% down. What if this thing doesn't, what if it doesn't come to rest very quickly? And we continue to see, oil prices remaining bid, inflation start to tick up. and corporate earnings potentially threatened by elevated inflation and rising interest rates, yeah, you could see the stock market down 9, 10%. It would be a very normal thing for the stock market to be down 10% right now, in my personal opinion. And so that's where I kind of leaned into that thought of the path of least resistance for me is to fade indices on rallies here in the short run, with, of course, a stop loss in case something changes. Let me explain. If this week we get something where, conflict resolutions are coming into the picture, if there is any pause on what's going on in the Middle East, right, you could very well see this market actually bottom out. But I can't call that. I can't predict that right now. What I'm going off of is we had a terrible jobs print on Friday. We have technical price action that is, at least for now, looking rough, right? If we go ahead and on the SPX, you can see our areas of support that we had previously noted are now acting as potential levels of resistance. So if you do get a little bit of a rally here, in my personal view, when you're looking at specifically like the Dow Jones, this would be one that I'm potentially interested in actually taking a small short position if you do get a rally up into these levels. Now, when I say this, I'm very much, if I was to short the indices, I'm looking for this kind of move to very quickly hold on the sell side. So if you get a rip to the upside here, and you may not get it, we might continue to flush lower here this morning. If we continue to see a rally up in the indices, I think you start seeing some potential sell pressure come in around that 38.2% retracement. It's going to be your 48,000 level. Again, indices are lower in response to a strong dollar, in which is, of course, in response to the spike in oil prices. It's all connected here. You've got significant pressure from this oil move. This oil move is no joke, because if you have this sustained, if oil prices stay up in this range, even if they stay above like 90, if you stay in this range, that immediately starts to put pressure on prices. Prices put pressure on inflation. Inflation puts, pressure on interest rates. Interest rates puts pressure on consumers, which ultimately puts pressure on corporate earnings. That is why you're seeing the read through here: indices lower, dollar higher, VIX higher, gold lower on margin selling, as we talked about margin calls very much. We've talked about that a lot. When you have a VIX expansion like this, it's very frequent. So yeah. Nick, does the Edge Finder consider geopolitical conflicts when creating the score? So not really, no. Kind of, and it's really administering to price action when it considers, right? So when you have geopolitical conflict, that's going to usually show up in price faster than anything else, right? However, we are working on behind the scenes. We have a tool that is in the works that's going to be a geopolitical monitor. So stay tuned on that. That's actually something that's coming out rather than later. We do have some stuff that is going to be coming into Edge Finder on that. However, again, the best way to keep an eye on geopolitics is to watch price, right? Because geopolitics, by the time you get an article talking about what's going on, the price has already moved way more than that, right? So best way to keep an eye on geopolitics is watch oil, watch gold, watch the dollar, etc. And just, a lot of times you can actually call a geopolitical move as taking place before you even see an article if you know your macro well enough, right? So the dollar remains strong. However, let's give credit to the bears here. They at least are trying pretty hard here to hold this 99.5 level. We have seen, the dollar bottom out. We've had significant strength coming in on this one. This is also another reason why gold is seeing some pressure, but really the pressure on gold is a couple parted, right? If you're asking why is gold not up, I've done numerous posts about this in the last 2 weeks, because I've seen so many people crossing their arms and tears in their eyes saying, why isn't gold going up? And again, if you understand the macro here, it actually does make sense that gold is holding up okay compared to stocks, but also not flying high. Why? Look at yields. Yields are moving higher, right? So this is Inflation pressures from the oil situation mean the Fed might go on pause. The gold market was like expecting rate cuts, right? Gold's like, all right, we're going to get some rate cuts. And then all this stuff took place, and it's actually dashing the hopes of rate cuts in a lot of ways. And so in response to that, gold is like, well, shoot, we're not going to get rate cuts. That's not very bullish for gold. Meanwhile, the other side of it is the dollar is firming up stronger than it has been in months, right? So we are seeing some strength in the US dollar. That is a pessimistic thing for gold. And meanwhile, that third party component, which is we have global market selling, AKA that is going to lead to margin calls. We have an expansion in volatility. We have stock markets globally selling off. What do people do to raise cash when they get margin calls? You have to sell things. What do you sell? Well, you sell stocks, but you also sell gold. You also sell silver. You also sell Bitcoin, right? Granted, Bitcoin is holding up okay today, but it is still lower in recent weeks, right? So that is part of the reason why I think gold is muted here. Now, I'm not actually super bearish on gold. We had some stagflation type data on Friday, big time, with the jobs report coming in weak. If we take a closer look at gold, though, there's some things that are not so positive on the gold score. Specifically, PMIs were very strong recently. We still have some decently healthy economic reads that we can't just ignore. These things matter. Retail sales, we do get new information on that soon, but services PMIs, manufacturing PMIs, consumer confidence, these things actually came in better than expected. We also have had sticky inflation and the 2-year yield also rising. Look, that is why gold is not flying higher here, is you have economic reads that are really backstopping that strong report. That strong price action. However, look at this. Non-farm payroll, we did get some big misses, right? But this is where people get confused. If you don't have the right tools to track this stuff, it is understandable why people are confused. If you're looking at gold and you're saying, why isn't gold going higher? Well, here's why, right? You have to have the tools to monitor this stuff. If you can't see the tools, then you're just wondering like, well, why isn't it going up? Look, yes, the jobs report was rough, but you can't just look at one report and say, yes, gold should go up now. Look, there's also stuff to consider, like inflation readings, like growth metrics, the strength of the dollar. We have to look at, seasonality. We also have to look at interest rates, right? It is not, if you are going to be a professional trader that trades gold, which is like the most popular thing to trade in the whole world, or one of them, Nasdaq's probably right there up there too. If you are going to trade gold, you have to be able to pulse check the macro fundamentals. And that is what the Edge Finders scorecard ultimately does. We can select gold and we can look at all this stuff and say, okay, well, inflation is holding us back. The 2-year yield rising is a bearish pressure on gold. Now, knowing this, if you know this well, and then this week we get CPI and then we get PPI and PC, if these numbers start to come in a way that is more bullish leaning for gold, you might have some a powder keg here, right? So something to think about. Yesterday, I also pointed out that these things, they have a funny way of finding a way to go green the next day. I said this inside of my Discord yesterday because, again, it is uncanny how often it feels that you have these sort of terrifying headlines, and then the next morning, they either go green or they are significantly recovered. So let me see if I can find my message. I don't know where I put it. Let's see, where is that? We had a lot of discussions going on here yesterday in the chat. I'm scrolling through my Discord to see if I can find that message. Almost there. Hold on. Okay, here it is. I found it. We had a lot of conversations yesterday. The chat was booming last night. I said, cool heads prevail. Stay calm. Don't chase. Follow your system. This too shall pass. Of course, that's not what I was looking for. Anyways, again, we were chatting like crazy, so I'm scrolling. I really wanted to find that. Anyways, what I was pointing out is basically a lot of times when you have these sort of events, it is like the most shocking, terrifying news headlines. And then somehow the next day, the stock market is green. And it's because the market panics, sells first. And then a lot of times you get, like headlines last night, like when oil went from $120 a barrel, smacked back down in response to G7 nations saying they're going to dip into oil reserves, right? So you have a lot of times you get some sort of response, right? You get these massive, scary moves in the market, and then geopolitical stuff that gets a response. Leaders step in and they're like, okay, we're going to do this, or we're going to do that, or ceasefire this, or ceasefire that, right? That's a lot of times what evokes that urgency in some sort of resolution or peace to what's going on. So I would not be surprised, again, if you get some bottoming out in the market. Maybe not right away, but yeah, we'll see. Ivan, don't worry about it. Ignore that. I just said yesterday that these things have a funny way of bottoming out by the next day, just as everyone kind of gets max fear. Max fear events, in a weird way, oftentimes cause some sort of bottom in the market. Hey, we've got Ivan in the backstage. We could bring him in, see what he has to say on all this stuff. I would love to get his take. Nasdaq's down 1%. Again, you have to understand, at one point yesterday, we were looking at a drop of almost 3% in the Nasdaq. So we are drastically higher from those lows already. We'll see how it plays out. We'll see how it plays out. Again, I am willing to take a small short position on some of the indices. James, if we could bring in Ivan, we can have him join the conversation. That'd be awesome. Take a look at like Dow Jones. Take a look at S&P 500, Nasdaq, et cetera. If we do get, some recovery here, there may be that opportunity to potentially, for me, some small short side makes sense. So we will see. Hey, Ivan.
Hello.
How are you? Happy Monday.
Happy New Time Monday.
Yes. Yes. Ivan, so stocks were much lower. I said yesterday in Discord, it doesn't really matter, but basically the point was, oh, look at this. Thank you. Thank you in the chat. Someone help me out. I said, I hope it actually stays discounted because there's some stocks that I want to buy. There's some other trades that I'd want to be on for the longer term, like individual companies. And I said, it feels like 60 to 70% of the time, anecdotally, these things find a way to be green by the New York Open. It's just the weird dynamic of this type of headline. Oil prices go absolutely parabolic overnight. And it's just like, I don't know. For some reason, that almost always, actually, they say there's an old famous expression, which is the cure for high oil prices is high oil prices. Have you ever heard that before?
No, but I'm thinking about it. Like, it could make sense.
It makes sense because if you think about it, okay, how do you get oil prices to come back down? Well, a lot of times if oil prices go crazy high, then it shocks the economy, decreases the demand for oil, and then oil goes back down.
Yeah. Basically, you send it extremely high, and then you shock the market, and then you shock the, what do you call them? The regulators. And then you get the G7 countries, as you said, to release their emergency oil reserves. That's,
Yes.
according to the calculations, would have 30 days of oil reserves. So maybe we should be okay.
Ivan, is this move on the dollar going to continue to the high side? What do you think? No. Give us your breakdown. What do you think?
Okay, so as I've been talking about, kind of wrong there, but what my theory is, and the reason is that, of course, this has continued higher because there has been escalation. And I'm trying to find reasons for why we should continue more and new escalations. And And now we are seeing that regulators are stepping in with oil reserves, and that should reduce it. But when we price in a new event like from here to here, um, that is the market taking in the new information. Here as well, this is the market taking in the new information, and then what generally tends to happen, not always, but as market goes higher, dollar goes higher, buyers start to take profit.
Mm.
So the higher you go, the more liquid you are. And I think we saw it famously on gold in January, and we fell about 21%. So, yeah, that's why I think lower.
And what do you think about gold here? You've got the chart pulled up, right? So gold has been very confusing for a lot of people because people kind of jump to the conclusion of like, oh my gosh, a war, gold should go higher. We've explained it several times. Dollar's firm, rates are moving higher, margin calls may be going on. But do you think that gold may settle out and then move higher from here? Like, do you think that once the margin call stuff kind of cools off? I mean, if you're thinking dollar may have limited upside, do you think gold could kind of catch a bid?
Okay, it depends. The longer we stay higher with oil, and I believe, to my little knowledge, that oil should continue to fall, and therefore gold should then should catch a bid again. And the reason is how likely or how high would inflation impact be with the new higher oil price? Um, and if I believe oil should fall, then I should also believe that expectations for interest rates hikes should also lower, therefore also be bearish for dollar and bullish for gold. But also we have China coming back from them. And secondly, if I was living in Dubai now or in the Middle East, where would I go with my money? Do I put that into real estate? Do I put it into the precious metals market?
Yeah, and that's that's the question, right? Is like when you look at this whole situation, the difficult circumstance with going back to oil is this where it currently sits? If we stay here, even if we just stay around this area, if we have a remaining high bid on oil for the next few weeks, that definitely starts to impact the inflation story. I think it already has and already, has been on the rise before all of this stuff now. But with such a shock to the system, we're talking about since the end of February, at one point we were up 83.5% in the spot price of oil. Of course, we've come back down here already, and I think that this is an indication, as you mentioned, the G7 nation kind of response. That is worrisome. Central banks globally are pretty much put on pause real quick by this, because if you're a central bank, you can't logically be like, oh, it'll all pass, it's going to be fine, because these things do happen and they can go on for a lot longer than expected. I mean, the Russia and Ukraine situation we thought was going to be weeks, it's turned into years, right? So you have this challenging dynamic of suddenly this reintroduces external factor inflation. If you're the Bank of England, if you're the Bank of Canada, if you're the Federal Reserve, you can't control what's going on with oil prices. And so that's outside of your scope. And so you're sort of forced, your hand has been forced. You can't really cut rates very much. And I don't know exactly which year this was, but I know it was in the 1900s, second half. There was some sort of Middle Eastern conflict. Oil prices went crazy, and the current Fed at the time chose to cut interest rates anyways, and it led to terrible inflation. I'm going to say that's like 70s, 80s period. Maybe somebody can help me out with the geopolitical conflict I'm thinking of. But yet the point is, the Fed does not want to repeat that mistake of cutting interest rates into a geopolitical event that turned into a much bigger geopolitical event. So somebody asked, how do you think gold is going to play out? My thought process on gold is that I think that once the margin call, once things actually cool off a little bit, I think one of the first places people will still go back into is gold. That's how it was in COVID. In COVID, you had the initial sell-off with everything. And again, if you think this is a manipulation or a scam or rigged stuff going on in gold, go back and look in March in 2020. The same thing happened. Gold alongside stocks crashed. It sold hard. It went down like 15 to 20% or something in a very quick succession, because as margin calls start ricocheting through the financial system, people sell everything, including gold, to raise cash. That's why they say cash is king in market sell-offs, is because people who have cash can go shopping, but people who have assets have to sell stuff to have cash to get out of their margin calls. So gold is on the chopping block when it comes to margin calls globally. So that being said, once things settle out, I don't know if that's this week. I don't know if it's 3 weeks from now. But once things settle out, I do think gold will probably bottom and be one of the quicker recoveries in the short term. That's my personal opinion.
I could agree with that story. I just point out what kind of shocks or what kind of reaction does the market give when we have this shock to oil, therefore also inflation. And we can see here from a week ago where market was like expecting, some rate hikes coming out of RBA throughout 2026. But now we can see we're much higher. And by the end of the year, previously, before this, we were about 4.22, and now we are pricing about 4.4, 4.49 or so interest rate in Australia, and you can go to any of the countries. I've heard about where we're talking about rate cuts in Bank of England for the next March meeting before this, and now they're talking about a rate hike. Market talking about them hiking by the end of the year. And you would also see that coming out of Europe, market pricing in rate hikes. And what I think you were talking about earlier was the Gulf War. Because I remember there was something there back there in the 70s or so. And unfortunately, if I remember correctly, above 300 tankers was downed during that period.
Yep.
So massive. And could we go there again? Yeah. Could gold reverse higher? Yeah. Could it fall further? Yeah. Could oil go back higher? Yeah, it can. Because we only have 30 days of oil reserves until we need to have figured something out. And we're not in control of the future. But what we do know so far is that the current shock has been mitigated a little bit until we kind of take the next step. So at every moment for the market participants, I would argue it's a step-by-step situation. What is it now? What is it now? Do we know anything new? And is there more escalation? And I don't know what more escalation there could be other than closing the strait as they have done now for the past.
Yep. Okay. I have some context. I searched it up on Grok. Persian Gulf. The Persian Gulf War, also called the First Gulf War or Operation Desert Storm, occurred in 1990 to 1991, triggered by Iraq's invasion of Kuwait in 1990. The president at the time was George H.W. Bush. Iraq's invasion caused a sharp oil price rise. And then here's what I was going for. The Fed under Alan Greenspan actually cut interest rates in response to the emerging economic weakness, and just like we're potentially seeing right now, and recession signals, despite the oil-driven inflation risk starting in late 1990, in November and 1990. This was partly because policymakers were confident that the war would be short and supply disruptions limited once the coalition acted, and they prioritized. And ultimately, inflation rose, and it was actually kind of painful. And so that was what I was pointing out. Somebody also in the chat made a really good point. They called to action this scenario backtest that we have on the VIX, basically showing that the VIX closing above 30 out of 428 studies typically does produce good forward-looking market returns when you look 12 months out. That's of course the S&P 500. So just kind of worth exploring is that you do have the VIX at very high levels here this morning. Let me just pull this up. I think VIX is over 30 at this time, 31. So, volatility is high. What that typically shows you is that people are very fearful. There's a lot of worry out there, and that historically speaking is a decent time to buy stocks. Now, that doesn't mean it's going to be a certain, money-making printing machine, but here on the stock market open, we are seeing, at least for now, Nasdaq is pushing higher here. Yep, we're looking at a potential Ivan bottom. That's what they call it these days on the stream. There's something about Ivan showing up makes the Nasdaq start to go higher. But we'll see. Ivan, I'm going to leave you to it so you can go over some of your charts here and have the stage for a little bit if you're good with that.
Yeah.
And thanks for being here. I'll back out and you can keep going. Before I head out, guys, if you want to try out the tool that I'm using, it's called the Edge Finder. We'll drop a link here in the live stream chat to where you can request a trial of the software, as well as get access to our free course. Even if you just want to explore, see what the tool is about, and study what we have worked on in order to find better trade setups day in, day out, regardless of market environment, then take a second to fill out this Edge Finder trial form here that's just been dropped in the live stream chat. We'll also send you with that email a free course on how to best trade with Edge Finder. Okay, Ivan, it's all you, man. You got it from here.
Thank you very much.
See you, man.
See you. Dragon says needs a pic of me in his wallet. Yeah, do you know what that should say? That should say, "Are you sure about that trade?" Because I'm gonna hunt you. I really want you guys to be proud of your trades that you take. They should be founded. They should be grounded. They should be solid. And I don't want them to be driven by fear, anxiety, or euphoria. I tried that before. It didn't really work out for me. So I don't really want you to try that either. It's a painful process, a lot of crying, a lot of upset and frustration. So if I can save you from that frustration, then we're good to go. Lubber 777 says that they could strike this desalination plant. They have over the weekend, both sides. Desalination, yeah. So I think they did over the weekend, if I could read correctly English. Yeah, we have already seen gas prices going higher, and they always say that Norway is going to be one of the winner chicken dinners in this. We're highly based upon oil. We have a large oil industry and service industry to the oil business, so higher prices generally gives us some more income to the into the government, because they tax, I don't know, 90 or so % of the oil industry, of the income that they get is going into taxes. So it comes back around somehow, somewhere. But yeah. Dollar. We talked about it a bit earlier. I think it should fall. And the reason is, as I try to explain, if I not, then I'll try one more, is the moment it gaps higher, that's when the new price is priced in. And after that is kind of, okay, we need to price out because there's no more escalation. Even though we have risen lately, this is from the beginning. That is because of the closing of the strait. And ever since Tuesday last week, we have just gone into a range. There hasn't been, and even over the weekend, you can say that's a new high, but it doesn't continue higher. And we had a bit of discussion in Discord in A1 yesterday about oil, and I said, hey, anything could happen in the weekend planning meeting. I said, anything could happen, but something for sure is the faster it goes higher, the faster it will go lower. And now in the last candle, we are having a red candle and we are breaking the gap, to so to speak. There's no guarantee that's going to happen, but this, if anything, and everyone, and if anything, any chart is being displayed of what I think in my head, this is what I believe. And of course, Maxi has shorted it. What was the price, Maxi? 112. Was it Brent? Was it VTI you sold? Yeah, okay. You are somewhere in this region selling, of course. That takes courage. That takes courage. That's not at all recommended. I I have certainly not done it myself. But but it's again coming back to what his strategy. What are you expecting? And he could have been wrecked left, right, and the center. There is no guarantee for anything. But if you have been here before, you know what to do. If you've been in old gold trade back in January, you know what to do. If you are, and I think I've said this for the past week now, that I'm looking for signs of de-escalation. I'm searching for sign that says, okay, your dollar should go higher. I'm searching for sign that says your dollar to go higher, so pound dollar to go higher. I'm searching for signs that New Zealand dollar goes higher. And then why so? Because the pricing in of the event has already happened, and then we turn into some kind of risk on if this was a different type of war, if this included Europe, if this included China, Russia, like a real scale hardcore war, we would be in a whole other situation. Secondly, when again we still have Russia, Ukraine, but it doesn't move the market anymore. We get I don't know if the word is war tired, but it has less and less implications to the trading forex, to the stock market, because like it doesn't have an economic impact anymore. If we didn't have the close of the Strait of Hormuz, then we wouldn't even seen this kind of market moves. But the further and longer that happens, and the more depleted the oil reserves, it's all about supply and demand. And I believe if we no longer have reserves, I think 200 is definitely a price for market for oil price to go to. Um, if we are in a dire situation of there is no more oil, then I would believe to myself, at least my little theories, Trump would be out of the situation then. That the cost of the war is too much, that he has to pull back. And I just hope that he does think that way, that there is a cost to everything, that it's not worth it. Because everyone remember this for the midterm election, what is currently happening. This isn't a new thing. So on the trading side, I'm very happy. I'm happy, happy, happy. That I get to see. Well, it's a reversal, hopefully. I get to see euro dollar making a double bottom. I want to see a higher high, higher low. So we have a high now. I want to see a higher low, and that's an extremely aggressive entry for me. But I can start buying here, and I can start buying. Sorry, I can start buying here as well. That would be for tomorrow. So the current, and that would be what is it, 10% of normal lot size. It's just a dab, a dab, going into see how that works out, and stop loss would probably be around 60, 70 pips. Normal for me. Nothing too much, nothing too great. And that's how I am planning to start dabbing into the market again. It can turn around on me. It can fall. It can rise. It can do a lot. I saw earlier today where Turkey had taken on one of the drones coming into NATO airspace. That's not an escalation for me, because it doesn't lead to NATO inflicting Article 5. So to me, we're back to normal. Nothing new. They should ship out of Oman, Saudi Arabia. So Saudi Arabia has directed their oil production through pipelines to the other side of Saudi Arabia towards the Red Sea, and Oman, as far as I know, is still operating normally, at least in the south in Oman. So it's just the oil that is trying to get through the Strait of Hormuz that is not able to, and the ships that is supposed to. And I've seen that Emirates is getting closer to normal operations. I think their normal daily was 300 flights, and now they're up at, what was it, like almost 400, 370, and now they're up to 270 or something in the past few days. But Qatar, Saudi, Oman Air was not up to where, and what's the other one called? JetBlue, not JetBlue, Flying Blue. What's it called? Fly Dubai wasn't up to, is not up to, but they're getting there. So that's another good, another part of the economy is to get air freight moving again, so goods and services and humans can start moving again. BTC looks like it might push through 70 again. So yesterday I had a bit of a discussion with Bitcoin, and I said, okay, you can fall further, you can fall as much as you want, but I believe we are overall going to go higher. And the reason I think we're going to go higher is that over this period where we have had this situation since 23rd, no, how many days? 6? Sorry. Since 28th of February, sorry. Bitcoin hasn't really fallen. So I'm like, why hasn't it been why hasn't it been done anything to it? So therefore, since it doesn't really seem to be going into serious downfall, we already fallen a lot, that once this situation kind of fixes itself, it should Bitcoin should have a relief rally. That is not financial advice whatsoever. That's just me analyzing the risk factors, the driving forces. That American economy is still fairly okay. We had a lower jobs number that was short-term shocks, short-term reasons. So I think that the NFP number for the next month of March is going to be quite okay. So then we're going to go back to U.S. economy being okay again. We have, of course, also falling inflation. And when we see inflation coming back up, we have inflation on which day today? We have inflation later this week, on Wednesday. If that comes out rather normal, then I think that is normal is anything above 2. Then I think the stock market, Bitcoin, crypto, sorry, is going to be like, cool, this sounds like a great deal. Yeah, I'm just double checking something. But, I said, funnily enough, that Nasdaq should have a bottom now. That is, of course, dependent that everything goes our way, that there's a de-escalation that Trump says or does, that Iran doesn't do anything more new, and that we are more likely of sorts to open the strait, and the market believes that is the possibility, because the whole problem here with everything is the belief. The belief everything will be okay. The belief that we're not going to incur a lot of losses. Belief that we're not going to have a disruption in the trade, and we're not going to have a bajillion inflations, and we're still going to have sales. Because if we now have high inflation with low growth, stagflation, then that's equally bad for an economy, as well as what is the word? The word is depression. I'm sorry to DCA into Bitcoin. Sure. How is this panic mode can impact dollar? Who is in panic mode? I'm not. Dollar is not. Dollar within the realm of normalcy is just moving higher in a normal fashion. Nothing too great. It's a normal move within 2% or so, 200 pips or so. But if you are talking about VIX, then yeah, we are at elevated levels. Anything above, I think it was 15 or something, 15 points, is elevated. I am not going to predict where this VIX is going to go because we still have a lot of room, but that also needs more. That also needs more. That also needs more escalations. But in the meantime, I think that 35 could be a reasonable top. Yeah, okay, so the reason why now market moved a bit was because NATO said that they have intercepted a missile heading to Turkey. I think that is old news because I saw that earlier. Turkey saying that intercepted it. Now it's just NATO confirming it, and then NATO confirms their readiness to defend all allies against any threat. And Kuwait is summoning the Iranian ambassador for the second time. So the thing, if NATO joins in, of course, that's a new escalation. That would send oil price through the roof. That would send VIX to the roof. That would send stock market down for a short time, and that would mess up everything. I think what the Middle Eastern countries has done, which they have been rocketed a lot, is not to respond to it, at least militarily, and let it kind of die out. Of course, it comes to the point where NATO is like, this can't happen anymore. But that's, of course, I would argue, is an attempt to escalate the situation, and I hope that NATO doesn't take the bite. Again, I'm sorry that this is real time. Again. So let me go back to my New Zealand dollar trade. Okay. I want you to be broken. I want you to be broken. And I want you to go higher and higher and higher and higher. Now, what could really rally this is the opening of the Strait of Hormuz. And I believe, and I might be daydreaming to believe that it's actually a remotely possibility. I also hope there's a remote possibility that Trump finds out that enough is enough. The goals has been done, and then the New Zealand dollar is going to have a bit of a, well, all the dollar pairs are going to have a run higher, dollar fall, and everything is easy peasy lemon squeezy. But in the meantime, I think we're going to go range. Same thing for dollar Swiss. I said yesterday I need a new lower high. Didn't. So we had a gap higher. Okay, cool. Just moving this one slightly lower then, and say, okay, I need to see this coming in until I'm engaged, or would engage. Sorry, again. Same thing for Aussie. New higher high, higher low, fantastic. Everything is great. Look for realm of possibilities. The thing is that Australian dollar higher would inflation coming in. Sorry, Australian dollar inflation higher would send Aussie higher. It's one of those countries that are pricing in to have already too high inflation, or coming in with higher already before this situation, to have rising inflation and even more inflation with the oil price should at least made Aussie stronger. The question is, would it get stronger than Aussie? No, does Aussie get stronger than dollar? Different story. Thought about Aussie yen. Absolutely fantastic. Who is that, James? I say this. Either if we come down to 110 or so, I would look for an entry. If we make a new higher high, which seeming to be the current theory here, I would also look for a buy. I just don't like the range. And I don't like that our situation hasn't been resolved yet. So if it can come down to 110 again, I don't know if I like that, but that would be great. But I think what I'm looking for is a decisive high and then decisive pullback, and then continuation. If you look at pound yen, it kind of happened. We had a new higher high, higher low. I was asleep, so I lost that one. And we have a new high now, trying to climb, and then somewhere we're gonna have a pullback overnight and then higher. So again, not really great, but what's currently pricing in for me is, or currently happening is, the pricing out of a rate cut and a pricing in of a rate hike, and that seems to be benefiting pound quite good and quite a lot. And that I'm still in this pound dollar trade, by the way. Currently at slightly break even, but it's a roller coaster. So I think we are still going to just going to go up and down, up and down, up and down until something happens. No long like range. You know what? There is people that loves to trade range, that could trade this like in their sleep, and they are absolutely brilliant, fantastic traders. I'm just not one. Why would you take a long position in your dollar if Fed funds score is -5 for the pair? Tedalika, thank you for the question. Fantastic question. Great, fantastic. Now the reason is, I said that last week. I think I can say this again. To me, what is currently happening is short-term volatility. And short-term volatility is, or sorry, war and that kind of a thing, is not linked to fundamentals. It's based upon sentiment, and where are we going to be looking for inflation next? Where's oil going to impact inflation next? And that's beside the fundamentals and technicals and such. So I have said a week ago, when this war started, that I'm going to be dependent on technical analysis, and for that matter, the war and how that is going, and new further developments and escalations. But fundamentals like CPI and NFP and labor and GDP, short term, doesn't really affect the market, because the force and the amount of disruption that the closing of the Strait of Hormuz is such a great threat to any economic data, which then becomes old, that we are solely dependent on development of what happens there. Because if you said we have 2% inflation and growth, but if we do back in March 2020, when we have 20 million jobs lost in a month or so, then the previous CPI didn't really matter, or the previous positioning didn't really matter, or the how we were as an economy is no longer presently correct. Therefore, we have to adapt to the new world and the new version. Does it make sense? Those are really triggers me, man. Crypto, man. I haven't what. I want to hold this pound dollar for as long as I can. So if my neutral is 1 to 2, 2 to 1, whatever that's in English, and I've said this about before. I've said this before about RR. I'm sorry, but somebody, maybe yourself or somebody else, trained you wrong. Because it doesn't matter. It doesn't make you successful. It does not make you a successful trader. It's a good tool. It's a good guideline. But it's kind of like it's kind of like running in the middle of traffic, but with a high vis instead of just normal black clothes and darkness. Like, something will happen to you, and it doesn't save your life. High vis doesn't save your life in traffic. Because if you keep buying downtrends you are going to have your trading account taken away from you in the end. Okay, chill. Maybe I should chill. 4 Iranian supertankers arrived in waters near Singapore with 8 million barrels of oil. And then Japan's finance minister Katayama says EIA urged G7 nations to release stockpile of oil. We didn't know that. They've had an online meeting with the G7 countries. Thank you very much for having that. And they discussed the Middle East situation, of course. But yeah, cool. So for me, I think over time, dollar yen should fall, hopefully, please, so that we don't get intervention by Bank Japan. I want all pairs, yen pairs, to go higher, as you might have noticed. Euro yen is also on my list. All the yen pairs on my list. Oh, okay. So maybe we can get a pullback on New Zealand tomorrow. That's actually going to be my top pick for tomorrow. Fantastic. Thank you guys for telling me that. You are beautiful people. And if we come back down to 31, sorry, not financial loss whatsoever, but somewhere down there, I'll be very happy. So I'll put a alarm there, and I'll tell you guys whenever I put an entry on inside Discord. So again, why not follow what Edgefinder says? Why don't I follow what Fundamental says? It's the impact and this disruption of the oil market is so much greater than we could ever imagine. That what is it, $7 billion daily Forex market, and 10 million barrels of oil times what is now 100. What is that? 10 million, 100 million, 1,000 million. It's $1 trillion a day disruption. So that's why. I'm just trying to figure out why it doesn't matter so much, but yeah, it's a gazillion different. Somebody can probably double check my math though. It's had math on stream, so that's limited as everything. You want me to do dollar yen? Okay, we can do dollar yen. Okay, so the thing is about dollar yen, dollar strong. There is interesting divergence here. There is a bajillion money spent, and I say bajillion because I can't remember the word right. The number is it 3 trillion yens a month on government purchase, QE, making yen weaker, sending dollar higher. We now have, we didn't have, but we now have. We had at least higher inflation. We had a good. America has a great economy, doing great, was doing great at least. Now we have the risk event as well on top of it, making it even stronger. Having demand for U.S. treasuries. What generally tends to do is that generally tend to strengthen the dollar. Now yen becomes, as everything else, becomes a bit of a victim. It's not really them, and it's for some fun reasons the yen does not become stronger. And I think that is because that yen, or Japan, or the Japanese people, which is the biggest foreign holder of US debt, is that they sell their own debt to go into US debt, so that their own currency becomes weaker and less demand, and the demand goes over to United States instead. And I just need to double check if there is a new something now. There's always something. Okay, nothing now. 2 comments about China. China's inflation improved. Okay, that should actually help Australia and New Zealand dollar then. Can't complain about that. What I'm worried about this week, or looking into, is of course GDP out of Japan, but it's of course the CPI on Wednesday, and for that matter, the PP, the CP, personal consumption expenditure, the GDP, and the core, and then of course always on a Friday evening, the consumer inflation expectations. That's always fun because I can suddenly reverse the market on a Friday evening just for the fun of it. Love that too. So to me, dollar yen should fall. Easy. But again, I don't control it. So as long as my New Zealand yen goes higher tomorrow, I'll be very happy. So in the meantime, in between me and you, and me meeting you over at my YouTube channel tomorrow, or any other day, is you can go check out my YouTube channel. I also provide mentorship within A1, and for myself, we had a meeting earlier, and we have meeting weeklies. So if you're not inside the Discord, I hope that you are, so that you can message me, and I can help you out with whatever trading issues that we have, because you need to become a better trader, and I'm here to help you. So until next time, I love you. Boom.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope everyone is doing fantastic. And of course, trading safely here. We had another ferocious open here when it comes to oil chart. It was up 28%, very shy of that 120 mark on the spot chart here. Again, just continued escalation. One of the reasons why I didn't want to have any risk, in the market as going into that weekend, because it could have gone either way. You could have had a de-escalation or re-escalation. And in this case, we had a couple things happen there. We had like actual oil infrastructure being hit, and you had Saudi Arabia pulling production from certain parts, which definitely went ahead and added to this oil spike as well. You also have the Supreme Leader that came out, which is just the previous Supreme Leader's son. So that was not a good pick for the market when it comes to a possibility of things being resolved anytime quickly there. Most likely than not, the previous guy's son is going to continue with what was going on there. So oil definitely caught a bid there. Doesn't seem to be sustaining itself right now, but of course, anything can happen. You also did have some NATO intercepting missiles going into Turkey. I think it's been 2 now that I've read so far. And then also too, so today you do have G7 countries meeting together to go ahead and see if they should go ahead and tap into oil reserves to go ahead and kind of, suppress the oil moves going on and the actual effects that it has with global inflation. I know I was reading too this morning that someone from the IMF, let's see what her name was, I forgot, but someone from the IMF was basically saying, central banks should start preparing for the worst, hypothetically there, and acting on that. You also did see some comments about the ECB and BOE rate hike opportunities. So they were looking to go ahead and hike the rates there. If I go to this page here, I think this is like an open source type thing, or I don't know, but rate probability, you can see that ECB is now looking at a 6.8% chance of a rate hike. It was higher before. It did scale back just a little bit there, but there is that possibility of that. So I think markets are now probably bracing for the opportunity and waiting for any sign that if we do patch into those oil reserves, maybe things can be a lot calmer for now, at least in the short term, until you see, of course, like something brand new, something worse. So I'm actually looking to go ahead and look at any fade opportunities. I don't have any risk on into the market right now, so I am like very lucky in that respect where I can react to either way. Um, but I'm looking for signs of a reversal here, or de-escalation, really, most and foremost. So I'll be watching the price of oil for that primarily. I'll be watching dollar index. I'll be watching the VIX. And then I'll be also watching some sentiment reads, right? So if we go to the Edge Finder, I do like the put to call ratio here for looking at a potential bottom. If we start to see this, highly elevated above this red line here, this high put volume line that says there, that basically means that the premiums are really high, and people are betting for some very, very drastic moves in the market. So if you see this thing above this level there, then you do have some good risk to reward opportunity. Of course, it could look ugly in the present time, but I do want to watch that put to call ratio too. Also, looking at the COT data, we did have Aussie dollar, which is one of the currencies that I'm looking to go long, potentially starting a long campaign. So probably a dollar cost average, just because it is still a risk on currency, and you do have that risk to the downside. But I did like to see that accumulation here in the Aussie dollar. You did see some accumulation here on the S&P 500 as well, 1.6% net change to the upside. But then we are seeing a little bit of conflicting reads there. So staying on that equity front, you did see the Dow Jones and the Nasdaq getting a bearish reading here on the COT report. Also, $2 index, right? The US dollar did get some bearish reads, 3.95% to the downside on US dollar. So you are seeing some conflicted things. You are seeing some appetite for certain assets there. So I do like Aussie dollar to the long side. So I'm going to be looking for any chance I can get to there. So right here, I'm looking at this level of 69.5 or 6,900 right here at this 50-day moving average, which is that red line. What I would probably do is pick up a half position size risk right here, and then be open to opening another one somewhere down below, maybe this 200-day moving average or whatever. And then if you start seeing a corrective, like V-shaped bottom, the technical structure starts to look more to the upside there, then I will obviously add to the position as I see fit. But yeah, I like Aussie dollar to long side as a contrarian play, hopefully betting on some kind of resolution or stuff coming down from there. But the reality is that could actually not happen, right? So you are seeing it right now as I'm speaking. Oil is kind of flaring up there a little bit there. You do have equities are starting to trade lower again as the market starts to get ready for that open. So definitely another possibility that you see this thing leg lower. Actually, potential outcomes for the S&P 500. If things start to hit the fan and it just stays high, then shorting equities actually might not be a bad idea, right? So fading any pops on the S&P or on the Nasdaq or on the Dow could be a good play there as well. You are seeing the S&P 500 meet with that 200-day moving average there from a technical basis, and the 6,500 level of support, right? If you look left, held once, twice. This is that third attempt there. If you actually break that, then you could actually see a bigger drop here. What I'm looking at from a technical perspective, if I just look left, something like this here looks good here for the S&P 500. But if you measure that move out, that'll be 7% from where price is at now, and that'll be 12% from the highs. So actually not that bad. Looks like a nice little correction there. So if you do get that, maybe at that point, if you hit this level, you are seeing that put to call ratio sky high, and then that could be a good buy the dip opportunity. But this is the first level where you will get buy the dip activity there. This will be the real test. You have a lot of technical technical characteristics there on this chart here. If you fail this, then 6,200 will be the next level that I'm looking to target. Let's see. I am short pound Aussie. I'm long Tesla. They got self-driving approved. Awesome, man. That's awesome. I think the bigger theme right now is just what's going on in the broader world, Ray Beast. But let's see what Tesla's doing. Tesla. You're long Tesla? Okay. Someone said, I remember seeing USD CAD, right? USD CAD was actually under pressure here overnight, but now it's getting a little bit of a bounce off of this technical support that I had once marked up. I bought here, so I took my profit up here, somewhere up there, just because of that oil correlation wasn't helping the pair out, and now it's starting to actually kind of fade to the downside there. We'll see if this picks up. A dollar CAD, probably not a good pair to trade at the moment, just because you do have the dollar getting that safe haven bid, but then you also have the Canadian dollar benefiting off of oil strength. So you're basically buying two strong currencies against each other. And that's why you've seen like dollar CAD, the price action. If I just zoom in here on the daily time frame, it's been in a range of, let's see, when has this started here? It's been in a range of, let's see, let's go back to, from right here. It's been in a range of 200 pips, where you look at something like dollar yen, and been a lot higher than that, right? So 300 pips. You have euro dollar here just fading off hard too. Euro dollar, 300 pips as well. So it's been pretty much the same there. But the actual price action has not been the best. It's been pretty choppy, where others have been trending to a certain direction. So that's what's going on with dollar CAD. Again, not the best pair to trade. I would probably trade something against like maybe euro CAD. Euro's getting hit pretty hard. So if you just look at the euro CAD chart, most likely, yeah, look at that euro CAD. Man, this was a good trade too. Look at that, man. Yeah, this 200-day moving average break, 50-day right below, and it has been flushing to the downside. Let's measure the move out here too. 400 pips. Yeah, so euro CAD would have been a better option there. Obviously, in hindsight, right, you didn't know it was going to happen as it happened, but euro's been weak. The Canadian dollar is strong because of oil. So I would rather something like that. Tesla is a swing trade with 0.5% risk. Awesome, man. Awesome. As long as it's risk defined and you're accepting, what comes with it, then you should be all good to go. You do have yields higher today. US 10-year yield high. All of the yields are pretty much elevated. Kiwi's actually doing pretty strong there. If I look at this currency strength chart here for the day, currency strength, you were seeing Kiwi at the very top here. Now it seems like they're starting to, kind of mean revert there, but risk on currencies were doing pretty well actually earlier today. Eurozone yields are elevated too. Japan, same thing, has been elevated for a while. Gilts are high. Swiss as well. So you are seeing a lot of interesting price. Actually, gold too here. Just been chopping around here. Maybe we'll get some actual direction with gold here. It's been at this 5,100 an ounce support level. Just been going back and forth, pretty ugly. We'll see what happens. I'm curious to see what the Edge Finder reading is on gold here. Well, actually, let's look at COT data for gold. So gold was a very neutral reading when it comes to COT report. Let's go look at top setups page. Let's see what's actually trending right now. So Aussie pairs are very bullish. Yeah, which is so interesting because Aussie is a risk on currency. This is one thing I would say though. Aussie and gold in China, they are correlated. They are all intertwined somehow. If you start to see gold pick up, China doing well, like that could be the other play too. So if you start to see gold start to pick up here, you will most likely see the Aussie dollar start to pick up. You're getting a bullish reading already on Edge Finder, so that could be a good play. Like I said again, I'm looking to go long the Aussie dollar or Aussie pairs. I might have to go along the Aussie basket too because the US dollar is a safe haven right now. So that's like buying two strong pairs or two potential strong pairs. Let me look at Aussie Kiwi from a technical perspective. Let me see what's the better play here. Aussie Kiwi. Let me write this down actually, because I do want to go long Aussie, and I want to go long Aussie against something super weak. So give me a sec here. So Aussie Kiwi is a potential. I want to look at Euro Aussie too. Euro Aussie had to go short. Nah, man, this thing has moved already. Gosh. Okay, Euro Aussie, not what I'm looking to play at all. Pound Aussie, I'm sure is moving too already. Yeah, so I don't want to chase pound Aussie. Aussie Swiss. Swiss is a safe haven, but it really hasn't been doing much in this time. Okay, Aussie Swiss, I'm gonna add to my list as well. Aussie Swiss. So I might go along a basket of them. Okay, Aussie Swiss. Not going long Aussie CAD or CAD Aussie. Okay, so on the list right now, I have Aussie Kiwi, Aussie Swiss, and I'll go long Aussie dollar too. Because if this thing starts to fade off a little bit, yields go lower on the prospect of de-escalation, dollar will probably go down lower too. So that'll benefit the Aussie dollar too. So Aussie dollar, Aussie Swiss, Aussie Kiwi are on my list as far as going long, potential contrarian plays. Let's see what the edge finder reading is. Okay, so all these two pairs here, Aussie yen. I like Aussie yen, the idea of it, but you are getting the yen depreciating pretty fast there. You do have intervention risks, so I don't want to play Aussie yen. Yeah, I'm not gonna play Aussie yen. Oh, Marco, I'm so sorry, bro. How long were you in the?
Hello. I just joined. I just joined. Yeah, it's fine.
Separate, like science. Okay, cool. How are you?
I'm doing pretty well. How are you?
Pretty good too. Just looking at
Awesome.
potential ideas, I guess.
Okay. Yeah. So you want to buy the Aussie?
Yes.
Cool. I'm looking at the same thing. I think we hit a bit of an extreme in the oil prices. I don't think we're going to go back to these highs. So possibly switching to a bit more of a risk-on position, maybe grabbing some Aussie dollar right now could be a smart play. I know the edge finder is not yet bullish, but maybe picking up a sort of a initial position is fine. I mean, relative strength, Aussie dollar is doing pretty well if you're looking at all of the other dollar pairs where the DXY is clearly bullish, but AU is staying flat. So what do you think? Are you going to jump in right now with a smaller position?
I may do that, honestly, just to get in the market. But we are, like you said, we are holding this level here. We've got into this level almost 3 times now, and it just hasn't hit my alert. So I may have to just jump in there. I'm looking at a basket of Aussie dollar. Just looking at the top setters page here for the edge finder. You can just type in your currency cross, like just AUD, and it'll show you every single pair with AUD in it. You have everything but Aussie dollar getting a bullish reading, and then obviously to the opposite side, when you have the the euro in front of it or pound in front of it, those are getting a bearish reading. So basically, essentially, Aussie dollar is pretty strong. I did see on the COT report, Aussie dollar was at the top of that list with getting the most net percent change to the upside, which is I like to see there.
Yep.
I think for the RBA, it's still 24% hike at the next meeting, which is good. So as long as that number stays there or even gets higher, that's good for me. I'm just looking at price action. I'm kind of just filtering out what I would play it with, like Euro Aussie, Pound Aussie. I was looking at those charts; those things have moved already, so I don't really want to play that. Especially too if you get kind of like a flip in sentiment, like things start to there's resolutions, and then these things can start to correct themselves. Pound Aussie too has already run away. I don't want to play any CAD pairs because CAD is right now pretty strong to oil, but also thinking if oil starts to weaken here, then CAD will weaken, and so that would probably give you a good risk to reward. But you just have that risk of going against the grain. Let me look at Aussie CAD price action. Yeah, I mean that could be good too. I'm gonna add this one to the list. I just have right now Aussie dollar, Aussie CAD, Aussie Swiss, and Aussie yen.
What about the Pound Aussie?
Pound Aussie is super weak, can't lie, but price has already moved. So I don't want to trade that. There was some talk on Financial Juice when it came to rate hike possibilities for Europe and the UK. So if I type in, man, it was last night, so it should be pretty fresh here. But basically, there was some talks for that. So just kind of being careful of the possibility of like a fade in these assets like euro and pound getting a little bit of a bid there. So just trying to be selective, just trying to be smart about how I pick my current pairs. Someone said Aussie yen. The yen has been depreciating pretty fast there, so you do have that intervention risk. So probably won't play anything with the yen in it. That's just my personal opinion on that.
Whoop.
Someone said,
sorry,
"Why?"
Can you hear me?
Yeah, I can hear you.
I cut out a little bit because I got a call on my iPhone and then it took control over the whole PC. Just a second.
Okay. No worries, no worries. Raby said, "Why buy pound Aussie?" I wouldn't buy pound Aussie. I wouldn't buy it. Aussie dollar strong. Like this is a strong trending chart. The chart's doing what it's supposed to do. The only thing is like it's already moved away, so you don't want to chase price. Similar to oil trading right here. Like you don't want to chase the oil to the upside. So if the chart's moved away from you, you kind of missed the trade. It's fine. Just move on. Find something else. There's opportunities. You just got to find them. You just got to think it through. Obviously, you want to trade a strong currency against a weak currency. So you don't want to buy something like strong with strong, right? So it's just a matter of like finding what fundamentally works, and then price action that allows you to get in. You just don't want to chase price.
Yeah, I do like, out of all of them, I think the pound Aussie may be a bit overextended, but yeah, Aussie dollar seems fine. Aussie dollar looks fine to me. I'm also short the euro dollar, which is a bet that the conflict will continue. But with the recent sort of explosion in oil prices, I think it may be time to try and step in and maybe put some risk on. And also this position is running in a little bit of profit, so possibly trailing the stop loss on this one, getting in on a long Aussie dollar. It just looks so good. I mean, the relative strength, because of the oil move and because of such a flight to risk off, you would expect this to happen, and it didn't. Like the pullback was absolutely minimal on the Aussie dollar. That's why I think there's a lot of room for it to go up.
Yeah.
So what do you think? Will the ECB actually hike interest rates? I know that there was some news that it is now priced in the ECB will hike this year. But then when I look at some experts on the topic and some Forex experts, they don't believe that the ECB is actually going to hike. They say that it's just priced in.
Yeah, it's priced in already, I would say. And the hike possibility is very minimal. It's not like it's a more than 50% chance that they hike. It's very low percentage.
Yep.
The Eurozone is definitely vulnerable. They did voice that as well. Excuse me, I was reading something like that. However, I think when it comes to continuation plays, you do have the risk of it being a little bit exhausted. Now, obviously, I know I can't predict, when the bottom is or when the top is or nothing like that. But at this point, like I would trail stops just because you have that G7 meeting with the idea of them poaching into oil reserves. Maybe that's enough for the market to say, okay, we can actually put some time on our side there. Like, okay, at least we know that for the X amount of days or whatever, we can bet that there could be some kind of resolution until that deadline, right? So that's kind of what I'm looking for. If the market really loves that idea, if after the G7 meeting, people come out or the people with power come out and say, yeah, like we're good, whatever, for X amount of days. And if the market likes that, then I think there will be a flight to risk on. So we'll see.
Yep.
You are, from a technical perspective, you are seeing a lot of assets at these like levels where buy the dip means something, like it's worth it. So you have the S&P at this 200-day moving average, this level of support. You're getting like, a lot of these equity indexes here at discounts relative to where price has been right so far. So especially the Dow Jones, like it's bouncing off of this 200-day moving average. So we'll see how the market digests that. If that's the case, yeah, I'm looking to get a little bit of risk on. I like Aussie dollar too, especially if gold starts to do well somehow, right? Like if you kind of have a reset, like maybe you have some margin calls going on and there's resets in positions. Yeah. Gold starts to act as a safe haven again, right? And then obviously Aussie dollar is a little bit tied to gold, so that would benefit the Aussie dollar too.
And last week I made a video about the topic of Trump doing a taco on the whole war. So essentially, since Trump and Israel have not gone out and stated their objectives, we're not sure when they will be successful or unsuccessful, which also means that Trump can declare victory at any point in time. So he can say, we killed the main guy, we bombed the crap out of them, and mission accomplished, we won. Now with the rising oil prices, it puts a lot of pressure on him to end the conflict. Not just from countries such as China and countries in Europe and India, for example, that heavily rely on oil and gas from the Hormuz Strait, but also at home, because we know that I think you said it. So with a $10 gain in oil, I think there's a 50 basis point move in the CPI. Is that correct?
20 basis points. Yeah.
20 basis points. So $10 is 20 basis points.
Mm-hmm.
Okay. So essentially, oil has moved, what is it, $30, $40? So, so that is almost 1 basis, or that is almost 1% higher inflation, which could force the Fed to remain hawkish for longer, which Trump would hate to see. So there's pressure from all over the place on Trump to prematurely end the conflict and declare victory, which could happen at any point in time. And if you get the headline, it's going to be a big move. It's going to be a big move. We're going to go back to the initial levels on the risk on assets. So possibly positioning a little bit before the headline comes out could be smart, but you could get crushed as well. No one knows. But what do you think about that theory that there is so much pressure on Trump, that we know, or he has demonstrated in the past, that his decisions are heavily influenced by the markets, right?
Yeah, there's a lot of pressure, and you do have. I know this has not been the talk of town lately, but you do have a new Fed chair coming in, his pick, which is a known to be in the past an inflation hawk. He does not like inflation at all, and so if he sees these pressures, now obviously he was elected for a certain reason, right? Trump thought he was a good pick for X, Y, and Z. Maybe he's no longer the inflation hawk that he was, but we don't know, right? We don't know how it'll react. This is not just inflation ticking up. This is global inflation ticking up, a huge disruption to everything going on there. So Kevin Warsh, right? He's set to come in sometime soon. If he inherits this environment, who knows how he will react to it? Maybe he reverts back to being that strong inflation hawk that he once was. And in that case, you will definitely see higher yields, all that good stuff. And the markets will not like that at all. So yeah, there's definitely a lot of pressure on his side for sure.
And let me give you another question. So since every trader at the moment depends on the next headline, how would you go about getting the headline? Would you look at Financial Juice? Would you look at Twitter? Or would you open up a Truth Social account to get direct access to Trump? Because he actually posts first on the Truth Social.
I would go to good old Financial Juice.
Okay.
Financial Juice pulls from like Truth Social and certain reliable sources on there. So it's kind of like an edge finder where it pulls all the data from different sources that's reliable, consolidates it, and feeds it to you. So this is my tool of choice when it comes to like headlines, right? Like news headlines, all that good stuff. And it has worked for me. Here, what I'll do for you guys, because I have specific settings on Financial Juice when it comes to the type of headline. So this is like basically my settings. If you want to like pause the video or screenshot it, whatever. I sent this to you, Marco, already a long time ago.
I have it.
I remember we were talking about this, but this is like, you can kind of tick on what you want to see, what you don't want to see. This is what I have for me. So I'll just scroll through it real quick, and then, whoever wants to do, y'all can, pause it and all that good stuff. But yeah, just, I have some things selected on and off for specific reasons. I won't go too in depth with them, but yeah, that's my thing of choice is Financial Juice. Can
you set a voice alert depending on the filter?
You can do voice news right here at the top right. You can launch it, but it is so loud, and it'll come at randomly too. But I have alerts on my phone, so I have the app. There's an app with Financial Juice. So if I'm away from my desk over the weekend or whatever, like things are happening, I always get flooded with alerts. But it's what I signed up for. So
cool. I remember when I did my internship at a prop firm, the first day that the internship started, I went on the floor, and you had all of the news from Bloomberg coming onto the speakers. So basically they had all of the news pumped into the whole room, and all of the guys had headphones. So the news had to be extremely loud to reach the under the headphones. So that was a big shock to me. They have the voice news.
Yeah, it's super loud, man. It's super loud. I used to have it on like before I would do the live streams and stuff like that. Like, before I would come on here, I would have it on and it'll be blasting in. But it's a little unnecessary. You can read it, But what I would honestly say, though, like actual advice, in an environment like this, and this is going to be a plug, is used for one, low size, right? Wide stop loss, shorten your time horizon too, especially now that this whole thing has kind of like started to play out now. It's no longer fresh, where you have the opportunity or the possibility that things can de-escalate. Shorten your time horizon on the trade. So one thing that saved me was early last year when the whole like tariff things were fresh off the gate. You would see like these headlines, and you would see like dollar CAD pop like fast, and then like within an hour it would mean revert. So like the amount of pips you would try to catch on a typical swing trade that will play like out for a week or 2 weeks, you'd get them within hours. So I would say is lower your risk, widen your stops, and shorten your time horizon for the trade. And then also too, sometimes it's best to actually not pay so much attention to the headlines. Like pay attention to headlines that are filtered out and vetted, like something like Financial Juice. But it's really dangerous when you're like on Instagram or certain like feeds or whatever, and you're getting certain headlines because a lot of it's fluff. I would really suggest like you get yourself some kind of reputable data collection source like the Edge Finder, where you can see actually like what institutions are buying. They're buying Aussie dollar, they're buying the S&P, right? They're selling, as of the last report, they're selling the Dow, they're selling the yen, right? There's a real risk around that. So I would definitely go ahead and get something like this. And also too, like if you just don't have the funds or whatever, go to something like the Telegram channel. It's completely free. It's free value. So I would definitely recommend those things for people that are trying to navigate this market and not get smoked. Because I wonder how many people bought oil at the top here or whatever, and now look, it's just completely reverted the whole move almost. So.
Yeah,
very tricky
definitely
things.
not the guys in the A1 Discord, because the A1 Discord guys have just been buying oil at pretty good levels, and I see a lot of profits in there. So congrats to all of the oil experts in the A1 Discord.
Lots of it was very. I was at Target with my fiance, and I was just like, she was doing her thing, and I was just watching all the memes flow through and all the good talks there, and it was fantastic. And also too, like, I would recommend people like buy the VIP Discord, get the trade alerts, right? Because you have Marco in there dropping bangers, like he's been short euro dollar and other trades too that I'm unsure of, but I have seen success from Marco. You have Nick, you have Ivan, you have Chris Bover in there as well that are navigating these markets. So if you want to like navigate this with some clarity and some confidence, I would definitely recommend the VIP Discord for sure.
Yep. And I usually take Alan's ideas as well and put them in as mine. So I kind of steal Alan's trade signals, so you can find those as well in the Discord.
Yeah. It's good because the Discord like has great talent in there. That's what I love about it. Yeah. Like it's not like a bunch of 14, 15-year-olds. Like it's like people with real experience in the Discord. So yeah, man, like I really enjoy being a part of the A1 community. It's fantastic, especially for us in a profession where like you don't go to an office, or me specifically, like I don't go to an office. I like, this is like my little community, right? Like my colleagues in a way. So it's fantastic.
Absolutely. So I wanted to ask you one more thing if you have the time. But before I do, let me just post the link to the form. So in the comment section of the stream, you will find the link to the form for the DNA funded giveaway. So just fill it out, and during my segment, in like 5 or 10 minutes, I will announce the winner. So one more question I have for Alan is going to be on USD JPY. So we are approaching the level 159, 160. What are you doing? Are you prepared for possible intervention? Are you staying out, or are you still thinking about getting in, maybe having a sell limit at 160? So what's the game plan?
I'm going to do this. I'm going to put an alert at 160 for now. Once it gets tagged there, I'll use my discretion to see if I hop in or not. Because if it just blows past it, whatever, but I'll put an alert at 160. Now you have the idea of a possible de-escalation. If you do see that, then I think it'll be, the dollar will get some softness out of that. So that will naturally shift the dollar again lower. But then also too, you do have, it will make more sense for the Bank of Japan to intervene if they want to intervene. There's a lot of nuances though. You do have, a lot of central banks are going to talk today. I was actually seeing a lot of talk from Takaishi on Financial Juice earlier this morning. So something to monitor there. But I do think that the path of least resistance in like from this level moving forward will probably be to the downside. You just don't know when. But yeah, I'll look at 160. I'll put an alert there. If I do enter the trade at 160, it will be extremely low size. It'll be a tester position. And if you start to see this thing really start to move to the downside, then I would probably put some size behind it.
Yep. I got you. I'm in the same boat. So
it's still up in the air though. It's tricky. It's up in the air.
Yeah.
But I do like the trade. I don't think it's the right time just yet.
Possibly waiting a little bit more. With the new prime minister, I'm a little bit hesitant if the intervention will actually happen, because apparently she doesn't really care about the yen weakness. But the BOJ, Bank of Japan, has been pretty vocal about that level. So just getting in on a feeler position, it makes sense. The reward to risk is there. The probabilities are there. So I think it's a pretty good play to have.
Yeah. But I'll leave you to your giveaway here, Marco.
No
one last time, guys, get yourself a copy of the Edge Finder, join the Telegram channel, get the VIP Discord trade alerts, because Marco's in there and he's fantastic. But I will leave you to it, man, and we'll talk again soon.
Thank you. I think we're going to talk tomorrow. So have a great rest of your day.
Alrighty, man. Take it easy. Bye-bye.
See you. Okay. So thank you, Alan, very much for your thoughts. I always enjoy these joint streams. They're so fun. And I can't wait for tomorrow, because I'm probably going to take a buy position on the Aussie dollar right after this segment ends, which you're going to get an alert. If you're part of the A1 Discord, you're going to get a trade signal on the Aussie dollar. Essentially, if you want to join the Discord, if you want to get all of my trades, click the link in the description. Use the code Marco and you can get 25% off. So check it out for 1 month. Being there for 1 month, see if you like it. Trust me, you will definitely like it. And if you don't, you can always cancel. So thank you, Alan. And form time once again. Where's my form? Okay, so if you want to participate in the DNA funded giveaway, you need to fill out this form, and then you'll get entered into a wheel of names, and I will pick a winner. It's going to be a 5K one-phase account. Okay? If you want to get funded, then definitely check out DNA Funded. So this is my personal 25K two-phase account. Current equity is 26.8. So I have made $1,800. Target is 2.5. Current trades open, sell on your GP, buy on gold, buy on the SPX. I've had a great experience so far. There's a big broker behind this prop firm, and it is one of the prop firms that you can trust, alongside, let's say, FTMO, E8 Markets, 5%ers. But then if you use the code A1Live, so the code is A1Live, you can get 25% off any DNA funded challenge. So check it out. Great firm, great price as well. Getting to the watch list. So what do we have? We have the euro dollar, which I have a position on. I'm going to put the Aussie dollar. Is it pumping at the moment? Let's go to the 1 hour. Yeah, it is. I'm going to have to take a position ASAP. Let's see the 5 minute before it runs away without me. Okay. So essentially, we have the euro dollar on the daily. This is a trade that is betting on the conflict being prolonged. So conflict lasting for, I don't know, let's say 2 months, 3 months, 5 months, 2 years, something like that. Strength on the dollar, of course, because the dollar is a safe haven. Weakness on the euro, because Europe is going to hurt from higher gas prices, higher oil prices, supply chain issues. That is going to hurt the GDP. possibly the ECB will have to keep lower interest rates. I know we're priced in for a possible hike. I don't think that's going to happen. I think that's not going to happen. So if the conflict lasts longer than people expect, euro should go down, dollar should go up. That's the name of the game. Pound Aussie, I'm looking to sell, but what Alan mentioned, Pound Aussie looks overextended. I don't think I'll get in, actually. Let me see, GBP AUD. What kind of a reading are we getting here? Very bearish. Okay, that's fine. What I do like more at the moment is the Aussie dollar. So buying the Aussie dollar has been holding up very, very well. So very, very well. Stop loss underneath this low. Let's say 111 pips for the stop loss or something like this. Target, well, I don't know, no profit target in mind, but if you get a conflict resolution, Aussie dollar, because it's been holding up so well, I think this has the power to go to the upside with some pretty nice strength. Also, the RBA, Central Bank of Australia, they are hawkish, meaning higher interest rates, meaning bullish for the Aussie dollar. Okay. Giveaway time. Let me grab all of your names. Today is the 9th of March. So let's take a look. 9th of March, 9th of March. Okay, let's see. Let me copy the names. Not a lot of entries today, but that's okay. Gives you guys more chance to win. The guys that are participating. Wheel of names. Spin. Let's see. So Ant or NT. Anyway, NT, congrats on being the winner. I have your information. So after my segment, you can expect an email for a free 5K one-phase DNA funded challenge. For those of you that did not win, but you want to get funded, let me repeat the code. So this is my account, DNA, two-phase, 25K. If you want to get an account similar to this one, check out DNA Funded and use the code A1Live to get 25% off. Just to repeat myself. So, yeah, Aussie dollar going up. Crap. I'm going to have to wait after my segment to get in, but this looks pretty good. I love the relative strength. As I mentioned, you would expect with this risk off, with this war, you would expect the Aussie dollar to retrace quite aggressively. That didn't really happen. I mean, Aussie dollar has been holding up pretty well, as far as I can tell. What else can we look at? We can look at gold. Gold, not a fan. I'm not a fan of gold at the moment. I know you guys love it, but for me, I don't really like it. So it won't make me entry. Always says already submitted. So the form resets once per month. Okay, form resets once per month. If you have already submitted your email, you have to wait for April. If you have a second email, you can get in. Okay, so 1 email per month as of the moment. Those are the rules. Okay. Gold, I don't want to do anything. The reaction after the war started was a bearish one. What do you think is going to be the reaction if the conflict ends? It's going to be a bearish one as well. So gold usually acts as a safe haven. So if there is no reason to go into safe havens, gold should sell off a bit. So according to my analysis and according to some of the experts that I'm watching, such as Brent Donnelly, Alfonso Pecatiello, they don't see a bullish case. I mean, during a safe haven demand, when the war started, gold sold off. If the war ends, gold will sell off even more. So I'm staying away. And also what doesn't help is the neutral reading on the edge finder. So let's see, last thing for today, USD JPY. Last thing for today is going to be USD JPY. I talked to Alan about this. So as far as UJ goes, we have the area above we have the 160 area, could be the intervention level. If we hit 160, I will most likely get in on an initial feeler position, initial sell position, betting on a possible intervention from the Bank of Japan. Of course, if you're in the A1 Discord, you will get a notification about this trade. I'm like 80% to 90% certain that I will take it if we hit the 160 level. Stop loss, I'll have to think about, maybe above 162. So favorite thing for today, buying the Aussie dollar, and I'm watching USD JPY for a possible intervention zone. I'm also in a sell position on the euro dollar. That's about it for my segment. Thank you very much for watching. You can catch me for the whole week. I'm streaming every single day, and I'm giving out one DNA challenge per stream. Don't go anywhere because you have Tiger coming on after me. Thank you very much for watching, and I will see you tomorrow. Good luck.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Tiger here to close out the show for the day. Happy Monday to you. Happy March 9th. Getting close to St. Patty's Day celebrations here in the States. Looking forward to it. Maybe a green beer or 2 or 17, something like that. We'll find out. I haven't even drank a beer. Gosh, it's been, a couple months probably for me. But St. Patty's Day is just a whole other animal, guys, here in the States. So looking forward to it. But just like Nick said on the commercial there, definitely go check out Ola Prime's website, olaprime.com. From here, you can, it looks like they've actually changed things up a little bit now that I'm seeing this. But either way, check them out. You can always create a free dashboard. And when you do that, I do want to also remind you guys they do have a competition going on starting on March 22nd. So it gives us plenty of time to join this. They do have some pretty cool prizes. I think $2,000 for first place. Let me go look at the prizes for you real quick. $2,000 for first place plus a 100K 2-step prime challenge account for free. That's the same one I've got. I like it a lot, guys, because it's got not only the currencies, the indices, Bitcoin, gold, silver, all you can think of. It's also got the top 25 or 26 large cap stocks. So it's perfect opportunity to kind of play around in the stock market as well. And what better item to add to that than the stock box? This is a really cool feature over here for the stock traders. I don't know how many of the stocks are on here. It's something like 100. It looks like over 100 to me. But it was a nice surprise, guys. I didn't even know when I got into the account that it had stocks. But it's got the Mag 7s minus NVIDIA. I'll go ahead and tell you that. For whatever reason, they don't have NVIDIA in there. So I thought that was interesting. But either way, Nick does have an A1T35 code for you right there. There's a QR code on the screen, or you can just manually punch in the code to get a 35% off an account of your choice. So with that, guys, not in any trades at the moment. We'll definitely take a look at Aussie, New Zealand for you there, Ray Beast. here in just a second. But I did want to start off with the COT report and take a look to see what the big banks did. Remember, the banks are the ones making all the money. So what better place to start a Sunday for me personally? This is where I start my Sundays, is to see where the banks bought, where they sold, and see if that stuff matches up with some of the strong and weak currencies in the top setups page of the Edge Finder. So at the very top of the list, Aussie dollar. Perfect, guys. Aussie dollar is the strongest currency when we're looking at the economic surprise index. So it's a really good sign when you see the banks bought the strongest currency. I mean, they increased their net long percentage by 2.7%. They are net long overall, 2/3, okay, 66% net long. And they are net long as far as your longer term position traders as well, like the more multi-week, multi-month traders, yearly traders. Okay, Aussie is up here as well. So they're one of the leading currencies. Actually, they're the most net long currency overall. So yeah, that's a nice sign there. This is more so again for position traders, not so much for shorter intraday type traders like a lot of us are, right? I'm typically in a trade anywhere from about 2 days to 4 days max. I try to close everything out at the end of the week so that I don't get gapped. And this is a perfect weekend example of that. Looking at things like oil and some of these other assets that just gap like crazy. I was in an Aussie yen trade, and then I'll get to your Aussie New Zealand here in just a second. I was in an Aussie yen trade coming into the end of the week last week, where I had bought, let me see here. Yeah, I had bought in, let's go do this. I'm going to turn on my I seem to have lost one of my indicators. Oh, well, no big deal. So, yeah, I had bought in down here. Let's see, Thursday. Yeah, I had bought in on this demand down here. Right here on this, where price bounced in right here. And got a really strong push up before the end of the day. So I was able to take this for a win. And it really kind of took away a little bit of the sting from the euro pound loss that I had last week. Remember, guys, it was giving us a +6 score on euro pound at the early part of last week. And then as soon as I get in that long, that's when the scoring starts to go down to 5 for a couple of days. And now it's down to a 4. So it's a neutral. It's on the neutral list. Either way, took a loss on that euro pound. But this was just a nice small win to kind of claw back some of that. Going into the end of the week. And this is exactly why we get out of trades, or I get out of trades, to avoid these gaps like we have right here, guys. If I would have stayed in that trade, I might have, well, I had actually pushed my stop loss up to break even just because we were getting closer to the end of the day after the lunchtime doldrums yesterday. So I went ahead and did that. But then we get a gap. But the cool thing is, or the funny thing is, we dropped into a new demand zone and off we go with the Aussie yen. So overall, it is kind of sideways. If you're a sideways trend trader, I'm not. Then there you go. I mean, that right there is nothing but a sideways trend. People buying the lows, selling the tops, that kind of thing. But it looks like we're trying to break out of it. I'll be interested to see where this 1 hour candle closes that we're currently on, because everything else has just been kind of wicked into. But we do have an overhead supply zone. So, yeah. The best discount would be down here on a smaller time frame, but I'm just going to kind of let Aussie yen do its thing for a while. I don't like to get involved with all this sideways chop. So break a high, maybe reestablish some demand zones on this brand new impulse leg. If that were to form, I'd probably be a little more interested in it. But Aussie New Zealand, let's take a look at that for you. It is obviously our strongest bullish asset at the moment, +11 score. Looking really good from a technical perspective, really good from a sentiment perspective, guys. Remember, the banks just bought the Aussie dollar. And then what did they do on the Kiwi, by the way? Let's go look over here. NZ, I know it was sold. So, yeah, they added to their net short positioning, which is 78% overall, but they added another 2.5% net short last week. In fact, pretty much all these currencies, guys, with the exception of a couple of these, pretty much everything got sold off. I mean, again, you had the Aussie that was bought. You have a little bit of Swiss buying, okay, some safe haven activity kind of popping its head up. But the same can't be said for the yen, because if we take a look at the yen, it's at the very bottom at a -5%. right there with the Dow. Okay. Dow, of course, is giving us a bearish signal to short. I don't know about you guys. I haven't really done a whole lot of shorting of U.S. indices. It's just kind of, I know Nick kind of says it quite a bit, and I echo that. I don't know. It is giving us a bearish signal, and I do have an alert set on it, but probably just kind of tiptoe into a position like a Dow short right now. But yeah, look at all these currencies. I mean, everything got sold off, guys. Everything's in red territory with the exception of the Aussie dollar. So needless to say, going back over here to the macro scanners, the surprise index, we take a look, see if the yen is outperforming everything, guys. 83% of its high impact economic releases have been beating forecast. And then on the opposite end of that is your British pound. Okay, it's missing 4 out of 5. So that's economic underperformance. So pound worst, Swissy right behind it at a 33%. But we got to keep in mind that, again, they did increase the Swissy on the CO2 report. So the banks, do they know something we don't? Of course they do. You don't think there's insider trading going on every day? But yeah, any chance I get this week to buy the Aussie, sell the pound, that's where I'm at. So, but we'll get to some of those in a second. But just going back to your Aussie Kiwi, okay. Yeah, everything's looking good from a daily perspective. We got our 8 higher highs, higher lows. We got our 8 above our 21 EMA. That's the dark red and the light red. Okay, exponential moving averages. I like to look at some of the more recent weighted trading activity, or price action, if you will, when looking at those trends. So very strong. It matches Edge Finder. Digging into the demand zone side over here, this execution time frames. The zone I'm watching out for is this 1 hour time frame. Let me zoom in on that for you just a little bit. Turn everything off. I'm keeping an eye. Okay, this is so this is obviously the Sunday open after the Saturday prior when the bombs started dropping. Okay, we had a big gap down on Aussie Kiwi. But then when we bounced up, we did kind of create this one demand zone candle just kind of hiding out here. I got to say, though, in looking at this thing, the gap above it is weak. Okay, if we're taking a look at our fair value gap, okay, again, there's our zone. But look at the gap. It's not that sexy at all. Not at all. But it is a gap nevertheless, right? So there is still a tiny, tiny bit of inefficiency in that market right there. But it's really, I don't know. I don't think it's enough to get me out of bed. I mean, I'll still keep an eye on it if and when we hit the demand zone, right? But as far as getting into a trade, I just don't know. It's not very strong. We did break some structures to the left and we kept going quite nicely. And that's really part of the reason that I'm, giving it the time of day, because it did have it is a very strong impulse leg when you look at the whole thing from swing low to swing high. We are a little below the 61.8. We're more down in the kill zone down here. It's called the kill zone, the 71 to 88% range. Okay, if we're looking at fibs, I'll just pull that up for you real quick. All right, so that's going to be the red lines, kill zone. So you got the 61.8. That's obviously the most popular. 50, 61.8, 38.2 to a point. But there's also a kill zone down here. And that's where that demand zone is. So I'm going to be interested in it if I get a very strong bullish close coming out of it. Maybe a 1 hour bullish candle, maybe a bullish engulfing candle with a wick on the bottom. And most importantly, have our volume spread analysis candles start to grow. Give me a yellow candle down here or a big red candle after we hit the zone. And then I would be interested in that. Bitcoin. Well, it's obviously neutral. We'll take a look at it from technical perspective. I actually haven't looked at it the last couple of days just because it's not even been on the list. It is a risk-on asset. We are currently in a risk-off environment, so you definitely want to keep that in mind. But just looking at zones, yeah, let's delete this old zone that doesn't make any sense. We had a demand zone down here. Looks like I drew up. The challenge with Bitcoin is our 8 is below our 21 EMA. So that is a mechanical downtrend if you look at it from that perspective. Now, we have kind of based out, made some consolidations on a daily chart. That's those orange boxes that you see. And part of that is because, look, when price dropped, it bounced into this demand zone confluence that I have hiding over here to the left. I mean, we got a weekly, a daily, and I do believe a monthly over here. So, that's it basically stopped it in its tracks after this long downtrend over here, and then came up and just consolidated, went sideways. Nobody knew what to do with it. So the way I see this thing is I'm just going to let it do its thing. I'm not interested at all in buying or selling this asset. It's too neutral, too consolidated. And again, it's risk on when we're in a risk off environment. So don't know if that helps you or not, but I will say it did drop into a demand zone over here that I had drawn up, and it's given a nice, getting a nice push up. So when all else fails, look for supply and demand zones. As far as what else did I want to say? So yeah, Aussie, and then the S&P was another asset that was bought up by the on the COT report. But the other three U.S. indices were sold off quite heavily. Did want to point that out real quick over here. So we got the S&P with that plus 1.5% gain. But when we look at the other U.S. indices, there's the Russell at minus 1%, the Nasdaq at minus 2.8%, and then the Dow at minus 5%. So a little bit of mixed signals there. You got 3 of the 4 that were sold by the banks. But again, they bought the S&P for some reason. Okay. And then the Nikkei as well. And Nikkei's right there with it. So, but yeah, overall, they just didn't like the currencies last week at all. That's evident. Almost every one of them were sold off. So when it comes to these top setups on the top setups page, yeah, like I said, any chance I get to buy any of these Aussie pairs, I'm after it. And sorry guys, I have an alert coming through. As far as we'll take a look at pound dollar here in a second. As far as these shorts down here, we got pound Aussie, we got euro Aussie, okay, and then we have obviously pound dollar. Euro dollar is neutral, but it's close to being a bear signal. If you ask me, I don't really know that I have a ton of interest in shorting the euro. And the reason of that is because if we go back to our surprise index, it's our second strongest currency if you're not counting the yuan. So, it's basically saying sell the euro, buy the Aussie. It makes sense from the quote currency side of things, but I just don't know that I really want to be shorting a strong currency. So to me, the clear and obvious choice over here on the top setups is to kind of, I don't want to say ignore the euro Aussie signal, but just focus on the pound Aussie, since the pound is the weakest currency, right? So we did just have the pound dollar hit. Now the pound dollar is a -6. So let's take a look. Okay. Getting a bearish signal. I got my 8 below my 21. That's good. Lower lows, lower highs on the right side. This is always my daily, guys, over here on the right. We're a ways away from any meaningful demand zone confluences. So looks like we're going to have some room to run if we were to, bounce into a trade short. So what we've bounced into over here, oops, wrong one. What we have bounced into over here is a confluence of this 4-hour supply zone followed by the Sunday gap. So this is where we closed Friday. And then we've got the Sunday gap. Well, now we've returned. So within this 4-hour supply, okay, go down to a 1 hour and look for our confluence. And that's going to be the white line you see there, because we now have a 1 hour supply zone. So what I'm looking for now is the end of this hour. So 56 minutes. I want to see a bearish close on this candle, whether it's this candle or the next candle after, preferably this candle, because if price is, dilly-dallying sideways right here, then is it really that strong of a zone if it can't even push price down immediately? Probably not. And not only that, but there wasn't really a ton of volume spread analysis activity down here, guys. So that may be another reason to possibly skip this. But what I like is not only the 2 supply zone confluence, but the fact we have our 200 EMA, which is that dark blue line. It looks like it's trying to pierce it as we speak. So like I say every time, I just need more information. So for this case, I just need a 1 hour candle close. If I can get a bearish 1 hour candle close, and well, if I get that, then I'm probably going to look to buy the break or sell the breakout of that to the downside, right? Or a bearish engulfing candle, maybe on a 15 or 30-minute chart. Just something showing me that we're trying to change this upward momentum. Okay. Obviously, the unfilled orders is what I personally like to use, but it's also nice to have some confluences, again, with some, bearish engulfing candles or just an overall bearish hourly candle. That'll do the trick. Something with a wick on the top, just showing price was pushed up, but the seller stepped in and pushed it back the other way. Okay. Prices bounce back and forth between supply and demand zones like ping pong balls. Let's see here. What have we got? Man, guys are on it in the chat there. What's going on? So yeah, just nothing left to do for me except wait and see where this candle closes at the end of the next hour or at the end of this hour. So as far as more top setups, let's go look at some of these alerts that I had set for you guys. I got a handful of them over here. I actually threw a few stocks up here too. I think I've got 3 on there, but we'll stick with the currencies. I've went over Aussie Kiwi, went over pound dollar. We'll look at the euro dollar just for kicks. Now, it is also giving us a very, very similar alert than just like the pound dollar is right now. Now, again, my choice is to stick with selling a weak currency instead of selling a currency that's, relatively strong when we're looking at the other currencies. So pretty much going to probably ignore this euro dollar short. As far as dollar yen, okay, this is another one that's given us a bullish signal over here, a +7. But the challenge with the dollar yen, in my opinion, is we've kind of bounced into an overhead supply zone, guys. We're starting to get into that intervention territory everybody's been flapping their lips about over the last month or so. Anywhere from that 158 to the 162 range. Okay? You got a lot of people kind of front running this and stepping into possibly short. And I can't blame them. I can't blame them at all because, if we're taking a look at this, we got a daily supply, which is this yellow. Okay, if I go to a daily, this is going to have a nice strong gap down underneath it. But we're on the 4 hour, so we're getting some confluence here as well. Now, we've went through one of the 2 supply zones at the moment. Okay, so what we're looking at here was this green candle right here. This was really the one with the best looking gap underneath it. But we do have another one above. So price did chew through the bottom zone, and now we're kind of flirting with this top zone. So, yeah, like I said, it's not surprising to me at all to see people be shorting up here because we're bouncing into the 4 hour zone there, and then not to mention the daily. So I just like to get them out of my way so it's a little clearer. But for me to get into this trade, I need a disc. I need one of 2 things to happen, guys. I need a discount or I need a push above the rest of the supply. So if I just kind of zoom in a little bit, since price likes to bounce from zone to zone, I would like to see price kind of follow this green trajectory here. I would like to see price drop because I've got a better confluence down here, a daily 4 hour confluence at the bottom. And that's quite a few pips away. That's like 300 and what I measured earlier, 380 pips or something like that. 300 pips. Just call it 300 pips. So that's decision A. This is the best discount. Otherwise, let's break through the rest of the supply zones and get a close up here and then a retracement because that would turn this swing low and then whatever the swing high turns into, that would turn this into our next impulse leg. So anytime I find a supply or demand zone, guys, I like to find it on an impulse leg. What's the definition of an impulse leg? Well, it's a leg that breaks structures. Okay. So if we follow that yellow line, then we'd be breaking this structure over here. Break the structure. It shows that we've got some strength here. It had to have had strength because otherwise it wouldn't have been able to chew through a structure. Swing highs, resistance points, supply zones. And then again, just as importantly, get that close and then a retracement for a new demand zone somewhere in this area. So that's really my play on dollar yen. it's too expensive for me personally to be buying right here, and not to mention going up against the supply zones there. So, yeah, need more information. I want it to jump through my hoops. I don't want to chase price, right? When we chase price, that's where we lose our behinds, right? Okay. Anyway, so let's take a look at what else we got. Okay, Aussie yen, I already went through that. Pound Aussie, pound Aussie, because we haven't went through this. So this is our number one bearish asset, guys. And kind of like Marco said, it's really already made its move. So same thing. If I'm going to short this thing, I need it to go up to a premium zone. It's got to increase. I want to sell my used car for more than $10,000. I'd rather sell it for $15,000, right? So let's go up here where price is a little more expensive. And the beautiful part of this confluence, again, is that 200 EMA. I don't think I went over this on my live stream this morning, but yeah, we would also be bouncing into that supply zone and the 200 EMA. So let's just imagine, if you will, our EMA kind of following that trajectory right there, and then something like that. I need price to pierce the 200, but the last piece of info I need is my RSI, guys. I want to see it go to overbought territory when all this happens. So again, these are my rules. If they don't meet my rules, I don't get into the trade. As much as I love supply and demand and the zones that are created from it, it's nice to have the odds enhancers. The odds enhancers will save us at times. It'll filter out bad signals, or in my case, bad supply and demand zones. So yeah, that would be my choice on the pound Aussie. It's just too cheap at the moment. We are, if I turn off my drawings for a second, let's turn those back on, actually. Yeah, and the thing too is we are kind of running up against this, former support kind of turning into resistance. So you guys see we got a wick here, we got a wick here. Obviously, we got these tops here. So, but to me, it just doesn't look good enough to sell right there. Now, I don't know. Maybe we could take a peek on this candle here on a smaller time frame just to see what we got. I mean, yeah, I guess you could say we do have a 1 hour supply, but now we're starting to get into some time frames on stuff that's not really looking the greatest, in my opinion. I mean, I would need my push away at least the range of that candle times 3. Again, guys, 3 to 1 reward risk. Anytime I get into a trade, anytime I get into a supplier demand zone, to me, for my taste, it's got to create at least 3 units of reward. And I'll get into a trade if it's 2 to 1 reward risk. But as far as the structure created, see, it's not even broken and closed below the structure yet. So it's really even kind of premature to even draw in the supply zone, in my opinion. Okay. But I'm going to keep my eye on it because, again, if we do break this structure down here, then that'll be a little bit more appealing. But to be honest, I would have rather price just push through immediately. Instead, what happened? We dropped about 30, 40 pips, and we just went sideways. So that's probably going to negate this overall. Again, that's fine tuning on some smaller time frames, and the picture just doesn't look good. It looks way better when we talk about a premium, spot up here to short, where we're also bouncing into the 200 EMA. So 50 stays below the 200. I like that. And just for kicks, yeah. And see, I wouldn't be able to do this on a 1 hour chart because if I go to a 1 hour time frame for me, well, now the 50 is crossed over the 200 to the upside. So this is strictly a higher time frame short opportunity. It's in line with the daily. If I go to a weekly chart, okay, it's the 8 remains below the 21. So it just looks great. Oh, hello, Cartman. How you doing, Cartman? I had Cartman on here the other day. I'm sure if I go to a monthly, even if I go to a monthly chart, we still have our 5 under the 21. So higher time frames, it meets every single requirement. Lower time frame, I just need a I need a more premium price to short in. So that's that. That's going to be the main one I'm watching. I've got a handful of other alerts over here. If I get in anything, then I'll talk about it tomorrow. But other than that, we don't have any red folder events until Wednesday. So we could be looking at a little bit of a slower period from an economic release standpoint. But keep in mind, we got the war going, guys. I'm going to jump up out of here, and we'll see you guys again in the morning. Stay safe. Have a good rest of your day.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.